next guest analyst, Oliver Sloup from Blue Line Futures in Chicago. Thanks for being that's like, when you live down in Nashville, you start putting R's on the end of all your vowels like that. Yeah. That's right. So there, anyway, it slipped out. I don't know how. All right, Oliver, having a little fun with you because there's not a lot going on today. So, I mean, what are your thoughts here about this market, and what are we going to do to kind of get a rocket going here?
Yeah, not a lot going on today. I think the market's really just kind of catching its breath over the last two sessions. We saw a little bit more volatility, and today just kind of stabilizing a little bit. I wouldn't be surprised to see the market continue to stabilize or at least consolidate in a little bit of a trading range here into next week's trade. Next week, we do have March options expiration. There's quite a bit of interest, open interest. The 670 puts for March corn and the 680 calls, which might keep us range bound. After that, I think we start to pick up the volatility, which is in line with a lot of the seasonals. As you've mentioned, corn today trading in a 4-cent range is a stick in the mud. That used to be, many moons ago, a big trading range, but not in today's environment. At least not what we've been used to over the last 3 years.
That's why there's quarter, half, and three-quarters. I'm sure you know, but that represents eighths. Because back in the day, my dad would complain about trading in eighths because there would be days where they only had a half-cent range. But it was 4 ticks, right? Because you were trading eighths. So pretty interesting that you brought that up because it has been a stick in the mud, and maybe they'll just go to full pennies now to make it a little bit more exciting. Who knows? But you're right, and I'll save that for the next one. I just got rap in my ear, but I want to talk to you about some other stuff. All right, stay right there.